could be headed from here as well. Siddarth, thanks a lot for joining us. This is Pavitra. You know, we've finally come to the end of the Q4 earnings season. So looking at how things have panned out, how would you read this overall? And are there some standout pockets that you feel differently about now that the earnings are done?
Good morning, Pavitra. Thanks for having me on your show. See, earnings season has been a mixed bag, I would say. It is supporting the current prices. In fact, what we have seen, you know, if I have to take slightly longer term time horizon, we are in a consolidation since last 2 years, and earnings have been, you know, catching up with it. We started with a blooper in IT where Infosys, you know, was shaking our belief. But then the numbers followed by other IT space that gave, you know, some support to that space. And otherwise, banking, we didn't see any major hiccups, neither, you know, from NPA fronts, neither, you know, from positive part, that is, NIs were also pretty much stable. We didn't see any major positive surprise or negative surprise in banking, and that was good part. Even if you look at other spaces, FMCG, telecom, we haven't seen any major digression from the expectations of market. And that's the reason if you look at overall market or any large cap stock, you have not seen any major swing on the either side after the numbers. So earnings have justified these market levels. But the million-dollar question is that are these earnings, will they suffice to take this market higher from current levels? And that is where our apprehension comes into play, that we are not seeing any re-rating happening in market. And at current juncture, whatever the earnings we have seen, they are just trying to match with the levels of market. We are not, very positively surprised by earnings, and hence expecting that based on these earnings, market would give you great returns from current levels. I think that would be too much of expectation from this market.
Hi, morning. One sector which saw a lot of upgrades was auto. I remember Tata Motors numbers were strong. Bajaj Auto saw EPS upgrades post this numbers, and the stock was anyway hovering around its, lifetime high levels. Hero MotoCorp's numbers were pretty strong. So is that the sector where we can continue to expect earnings upgrades? Because the volume numbers have been pretty strong, ex of the two-wheeler exports. So should we expect EPS upgrades for autos to continue?
Yeah, and that's the reason, Reema, I didn't, touch upon that sector in my generic comment, because that is one space which surprises us. Unfortunately, that space doesn't have too much of weightage in Nifty or Sensex at large. But then we are seeing a lot of stock-specific activity. And let me, touch upon four-wheeler space first. Though we don't have Tata Motors under our coverage, and we'll be covering that soon. But then, as you rightly pointed out, numbers are, were pretty fine, and that's the reason we have seen, I won't say re-rating, but then market has been rewarding shareholders of Tata Motors. But I will talk more on what we cover, and that's Maruti. And that's where, we are seeing numbers not very significantly high, but then the composition of numbers or the mix of product is changing. And now we are seeing the MUVs and SUVs products where high margins are there. Those products are increasing their weightage in the overall numbers of Maruti. And needless to mention that margins are high in these names. At the same time, if you look at what has happened to stock, last 5 years, Maruti has been consolidating. And from earnings perspective, the stock is available at cheapest in what we have seen in last 5 years. We have been, suggesting aggressively to buy Maruti to our clients. We have aggressive target prices of more than 11,000 rupees in Maruti. So even after, a decent up move in Maruti, I think this stock warrants to be in your portfolio from the auto space. Coming to two-wheelers, yes, you mentioned about Bajaj Auto that despite, export numbers being subdued and which constitute almost 50% of its top line. Here too, we have seen that in domestic market, Bajaj Auto has seen revival, and especially on the margin fronts where we have seen the input cost pressure coming down. We do have a buy call in Bajaj Auto as well, but the upside is not very significant. The other space which I want to talk in auto is Eicher Motors, Reema. And we have seen record numbers. We have seen, again here, the new products being launched. margins are improving, and we are seeing a decent growth trajectory. Here too, if you look at last 3 years, 4 years, Eicher Motor from valuation perspective is available cheapest in terms of its a relative comparison if you do in last 2-3 years. So those stock price is doing well, but earnings are running ahead of stock price, and hence even at these higher levels, you may feel that the stock has run up, but there's still room on the upside if you see the valuation.
Okay, so auto seems to be an area of focus and something that you favor, Siddarth. Good to talk to you after this gap. But let me ask you about pharma, because that's really been the sector of the last 1 month, hasn't it? And the way the companies have come out with their results, almost all of them have been either in line or they've beaten estimates. Look at Apollo today or Divi's over the last 1 week. What are you folks liking in pharma?
Surabhi, a pleasure to talk to you again after quite some time. We are not covering pharma space very much in detail, but then the peripheral space related to pharma, which is diagnostic space, that is where we have some coverage. And particularly, I would like to talk on Metropolis, which is under our coverage. If you look at what has transpired in Metropolis is that pre-COVID, these stocks were never, in favor of market. And post-COVID, we have seen, or during COVID, a lot of people, flocked into the space and stock price did really well. Now, what has happened that stock prices have come back to, pre-COVID level. Earnings were very high during COVID phase. Then we saw earnings coming down, of course, because of high base. But if we expand the time frame and compare the earnings, what it was pre-COVID and now, earnings have drastically improved. Valuations are looking attractive, and some exposure can be taken, in such names from medium to long-term perspective. Pharma space, unfortunately, we are not covering much in detail, so won't be able to touch upon the names which you are, asking me.
No issues, Siddarth. A little bit of a shorter conversation this time, but we'll talk about the other sectors and some of your other topics perhaps in the next leg. Thank you for joining in today.
Sure.
Well, with that, we do have to take a quick break, but as promised, we will be joined by the management of Blue Star in just a bit.